Welcome to the show. I'm Sam Sadler, your host. I'm here with my friend, Cary Donham from Capital Concepts. Nice to have you on the show, Cary.
Good to see you again, Sam.
Yeah, you too. Cary and I have been friends for a long time. Just really brought him on. We have some things going on today in the marketplace I'm with this guy, and then all of a sudden I have to change up and go with this guy. And, I'm changing my strategy a little bit. Oh, no, this company doesn't work for me. I have to change it up a little bit. That's why I brought you in, because you're kind of a one-stop shop for investors as far as loans go, correct?
That is correct. That's what sets us apart from, I think, the average mortgage professional. There are other reasons too, which we'll get into, but we do have a three-phase or three legs to our business, so to speak.
Okay, those are the three investor loan types we were talking about earlier?
That is correct.
Yeah, do you want to go into that just a little bit?
Sure. Everybody's familiar with the traditional way of financing, right? Mm-hmm. You go out and you put 20% down. It's a conventional loan. You hear them say Fannie Mae mortgages, right? Fannie Mae, conventional, conforming, those are all the same type of loan, and the reason they call them conforming is because they conform to conventional guidelines or to Fannie Mae. Mm-hmm. Fannie Mae is the secondary market, right? And that's where mortgages are sold. Well, that's the traditional way of doing a loan.
Sure.
Right? It's been around for years. We have a little bit different way and a different strategy. It helps clients save money out of pocket on transactions, and that's the hard money to conventional two-step process. So hard money is our first step, conventional is the second. Now, at some point, you've heard probably that there's a cap on Fannie Mae mortgages, right?
Sure.
So what do you do beyond that? Well, you do our portfolio loans.
Okay, and tell me a little bit more about the portfolio loans.
The portfolio loan, and really we call it portfolio just to make a distinction between conventional and what you do beyond conventional. But quite frankly, a portfolio loan is a loan that you're going to hold in your portfolio and not sell to Fannie Mae. So it's going to be held in the bank's portfolio. It's just a bank loan that doesn't have the limitations that Fannie Mae has on their loans. Mm-hmm. There's no limit to the number of properties, and it's a commercial type product.
Oh, it's okay. So that just brought a little bit of fun into it because it's a commercial type product.
Right.
And when you say no limit, a guy like me, I'm like, whoa, no limit. So there's legitimately no limit. I could have 600 homes in my portfolio, and you could still help me out.
Yeah, as long as you qualify. I mean, you're still going to have to qualify for the loan, but absolutely, there's no limitation where Fannie Mae comes in and says, hey, 10's the limit. Mm-hmm. But I can't tell you how many times a client comes to me and says, Cary, I heard you can only have 4 Fannie Mae loans. Well, let me explain that. Basically, what they heard it was from, John Doe over at XYZ mortgage company. Mm-hmm. And that's just because that's where they set their risk limit. They'll only do 4 loans, or it's because the investor backing their loans will only allow 4 loans to any one investor.
Okay.
We go by Fannie Mae guidelines. Fannie Mae guidelines says 10. But once you go beyond 10, that's when you move into the portfolio.
Okay, that makes perfect sense. Now, I do have a couple of buddies that are entrepreneurs. Imagine that. We live in an entrepreneurial world. Right. Those are the guys that really seem like they're making it happen right now. Correct. Regardless of your standpoint, your industry, say I have maybe 60 properties in my portfolio, so to speak, that I have them paid off, mm-hmm. or I have very low money left on them, but they're cash flowing. Mm-hmm. And I have an opportunity that comes up that I need a big chunk of dough for. Mm-hmm. Would I be able to come to you and do kind of a refinance for those multiple properties, or
Absolutely.
How would that work out?
Basically, what you're talking about falls under the portfolio loans, mm-hmm. and that would be considered a blanket loan. Let's say we take 10, 20, or 30 of those properties, depending on how much cash you need, and we would put those underneath one mortgage, one payment. It's real nice. You deal with one payment each month, one bank, not multiple loans.
Mm-hmm. Okay. I guess probably the last question that I have for you is my biggest concern, because with corporate America today, you'll call up and you'll talk to a machine for a minute. You literally talk to the machine now. It's not even just push this. They're like, say yes or no. And it's kind of obnoxious in my opinion, but well, that's where we are. But at any rate, then you talk to a machine, and then you talk to a guy that sells you on the product, mm-hmm. and so that's who you're expecting to deal with, is because you buy into that guy.
Right.
We all understand sales, that you buy who you're talking to.
Absolutely.
Not 100% necessarily the company or the product that he's representing.
Correct.
And all of a sudden, next thing you know, you're talking to some other guy mm-hmm. that you don't necessarily mesh with and get along with. You're going, hey, wait a minute, what happened to my other guy? And I understand that there are processes and teams and whatnot, but I do hate getting handed off to someone. And I'm a football guy. When you hand off the ball, you're done with it. I'm blocking now. I'm in a totally different stage.
Right.
Okay, you have to run with that person.
Right.
So with capital concepts and how it's structured, when a customer comes and they work with Cary Donham, where does that go from there?
All right, we do have a team that we work together with. I have an assistant, I have a virtual assistant, and I've been using her for 5+ years now. She's great at what she does. I've trained her in the beginning on how to do the initial setup on a file. So when a client comes to me and they fill out the online application, I'm their contact. I'll always be their contact through the whole process. But there is a team still working on their file. My assistant sets the file up in the beginning, passes that off to a processor so the processor can ready the file for underwriting, get that ready and presentable, because a lot of people don't realize this, but the way you present a file to an underwriter can make the difference between whether it's approved or not and how fast that process goes. And in today's market with rates being really low, it's a slower process than it was even a year ago at this time. So we want to try to do everything that we can and put that in place so that your file moves seamlessly through the process.
And now, Cary, I talk to a lot of investors and do a lot of interviews. And I guess my big question is, why do people keep coming back to capital concepts again and again and again?
Great question, Sam. Just recently I had a client of mine who we've done multiple transactions with, but he happened to step into his bank that he has an account with. And he was there for some safe deposit box, or I can't remember the reason, but anyway, he was telling them he was getting ready to do a refinance. And they said, well, let us look at your credit and see what we can do. They immediately saw that he had, I don't know, 7, 8 mortgages on there. And just looking at his credit alone, they said, we probably can't help you. And he was sitting in my office telling me this, and I said, well, you know, the reason is they don't understand investor lending like we do. That's why our clients keep coming back to us. We can get the deals done when somebody else can't. And I think that's what sets us apart from the competition.
Okay. And so if you went in there and asked them for a hard money loan, they probably wouldn't even know what you're talking about, would they?
They wouldn't even know what a hard money loan is.
So why don't you just real briefly go into hard money loans? Let us know what that is.
Sure. Hard money falls under the category of interim financing. It's what happens in the interim between purchasing the property and putting a permanent type loan on it, semi-perm or permanent type loan on it. So what happens is if you're looking at a property that needs $20,000 in repairs, the chances are pretty high you're not going to get a conventional loan on that property, right?
Yeah.
So you need some type of financing there to get you over the hump. And that's what a hard money loan does. It helps you finance the rehab in there. Based on your price point, you can finance all or a portion of that rehab. And so you kind of get around that 20% down payment. That's how you minimize your payment in a transaction, is you go hard money, then move over to conventional after the fact.
Nice, nice. And then you're talking about after the fact. What do you do after the fact?
Well, what happens is you have 2 transactions. So you take the property down and do the purchase transaction with hard money, get the rehab done. As soon as the rehab's done, or even prior to a week or 2 prior to the rehab being done, you can submit the refinance to us. Then we start the process on the refi, which is your traditional conventional mortgage.
Okay.
And then we take you through that process. Once it's refied, now you're in your permanent financing, you're good to go.
Now, I've heard some stories, and you never hear it until you actually talk to the horse, so you can hear from the horse's mouth. As far as your hard money loans, I've heard that they can go really quick. And because a lot of investors out there, they'll find a deal, and the deals just come and go. If it's a good deal, it's gone in just a couple days.
Absolutely.
So how do they know that they're going to have backing? And what kind of a time frame are they looking about with a hard money loan from you?
Well, we've closed them in as little as 3 or 4 days. But we typically don't like to do that because what we're normally waiting on is title work, appraisal, so that we can set the loan amount, which is set at 70% of that appraised value. I should say the after repaired value, because we're doing a subject to appraisal.
Okay.
So that's another benefit to doing hard money instead of going by purchase price or as is value. So once I have title work, insurance, and appraisal, I'm ready to close it, but that usually takes a week and a half to get done. So I'd say the average is about 2 weeks.
Okay.
Where conventional right now, you can go 30+ days in trying to close a conventional loan, even on a purchase.
Wow. Okay. huge benefits.
Yes.
I just had to ask that because it seems like every hard money lender that I talk to, their answer to that's a little bit different according to their capabilities.
So I do these speaking engagements with 40 to 50 investors, and I'm talking to them about hard money, and they say, well, how fast can we close? And I'll tell them, well, I can close in a week. I like to have about 2 weeks to close it, so normally give yourself 3 weeks on the contract, but if you bring me every deal wanting to close in a week, I might have to cut you off at some point.
Mm-hmm. Yeah, I mean, that's just a stress factory in that case, yeah.
Right.
And in all actuality, you don't have to close on a property in a week. You know, let's slow down, get a deal done.
Right.
You know, and every deal doesn't have to be that fast. I totally agree with you.
No. In fact, and this is another thing that we help investors with, another benefit with us is how to structure the contract. Because if you just write the contract, if you'll notice on a third-party financing addendum, there's no place on there for hard money. So when you come to Capital Concepts, we show you how to get those contracts accepted.
Okay. Now, that brings up another point. You and I had talked about how much mentoring is with real estate. Everybody wants to mentor you in the real estate industry. And you don't really have to have a mentor when you work with Capital Concepts, do you?
Not necessarily. The reason is, when you have somebody like myself who's done 42 transactions, somebody like Blake who owns 60 plus properties right now, single family rental units, you have a little bit of experience there, I would say. And that's why we can talk with confidence in helping an investor from day one. I get a lot of new investors that come to us. And what we do is we do our initial consultation with them. And basically that is taking a look at their credit profile, having them fill out an online app. I mean, everything can be done online at their leisure, inside their own home. It's really nice. They can email us PDFs of their tax returns. And there's really just a few pieces of documentation we need to look at to see what we can do for a person. But beyond that, we want to find out, what are your goals? Sam, if you come to me and you only want to buy one property, the financing strategy for that's probably going to be different than somebody that comes to me that wants to buy 10, 15, or 20. So we really need to kind of follow the Stephen Covey principle, begin with the end in mind. I know everybody's heard that before, but I need to know what your end result's going to be. So if you tell me what that end result is, if that's a certain amount of cash flow to cover expenses as your first goal, perfect. Let's try to hit that because I know what the average investment property will bring in cash flow wise, and we can back into that and design a financing strategy that works for you.
And I know you don't like to toot your own horn and whatnot, but when it comes to investor type loans, I know that I would personally recommend you as one of the individuals to go with. Capital Concepts is a great company, don't get me wrong, but Cary Donham, as far as when I put something into his hands, I know it's done because you've been there, done that. Do you want to tell us a little bit about your experience with that?
I think what sets me apart from your average mortgage professional is I come from an investment background. I've been a decade plus in this business helping folks get into homes, whether it's investment homes or primary residences. But I've also bought and sold over 42 of my own single family properties, in addition to a couple of smaller apartment complexes, 10 units and a 12 unit, that I wholesale before to other investors. So I'm coming from a background of experience in knowing how the transaction works from both sides, and I think that's a benefit to my client. I've had situations where they show me a deal, and I'm kind of, tell me why you want this deal. Is this in your best interest? And we'll go through it and structure it and make sure that run the numbers on it to see if it is in their best interest, and sometimes it doesn't come out to be that way. I want to make sure that my investor is successful in what they're doing, because these are smaller loans than your average $250,000 primary residence. So we want you to be successful so you come back to us and do more deals.
And what are some of the rookie mistakes that you see out there from some of your counterparts out in the field? I'm not asking you to really go and point fingers or name names or anything, but as far as rookie mistakes, what are some of the rookie mistakes that your counterparts make out there?
Misinformation is probably the number one. Not giving the client the whole truth. Like when they go to XYZ company and they tell them they can only do 4 loans, well, that's not Fannie Mae guidelines. And typically the loan officer knows what Fannie Mae guidelines are. They should, in most cases, know what Fannie Mae guidelines are. So that's probably the number one issue that we run into. Yeah.
Okay. And I know that for instance, there was a major big box retailer that about 6 years ago, we all went through some hard times in 2008. But this is prior to that. It's about 2006. So they went through and cleansed themselves of a lot of the higher dollar guys that they had working in the aisles. And I remember walking through there and I said, "Excuse me, sir, I need a snake." And the guy looked at me and he goes, "I'm sorry, what's that?" And I said, "I need a snake." And he said, "Well, sorry, sir, you're in a big box store. I'm not going to name the name,
Right.
but I think you're looking for a pet store." And I said, "No, sir, I need a snake. You use it for cleaning out plumbing." And he was convinced that there was no such thing as a snake. So we went to the
Right.
plumbing aisle and I found a snake and taught him and 2 or 3 associates about a snake and how it's used.
Right.
So for me personally, when I'm out looking for a loan, especially when this is my business, because you do a lot of investor loans.
We do.
When this is my business, I want to make sure that I hand it off to somebody that, quote, knows what a snake is and how to use it.
Right.
So I'm very pleased that you're out in the industry. You're a credit to your industry.
Thank you very much.
Happy to have you, and thank you very much for coming on today.
Thank you, Sam.
Thank you very much. I'm Sam Sadler.